Kevin Warsh to be sworn in as Fed chair Friday, replacing Powell. Kevin Warsh is set to be sworn in as the next chair of the Federal Reserve on Friday, May 22nd, replacing Jerome Powell after nearly 9 years at the top of the central bank. Cointelegraph posted the report on X late on May 18th, citing the imminent ceremony. Source: the handover lands at a fragile moment for risk assets. As of May 19, 2026, Bitcoin is trading at 76,715, down 5.5% over the past 7 days. Ether is at 2,026 hours after an 8.1% weekly drop. The CMC Fear and Greed Index sits at 39, firmly in fear territory. A Fed chair transition into that kind of tape is the sort of overhang traders price into every macro print for the next 6 weeks. The man taking the gavel, Warsh, is a former Fed governor who served from 2006 to 2011 and was a key voice during the 2008 financial crisis response. He has spent the years since at the Hoover Institution in Stanford, where his commentary leaned hawkish on inflation and skeptical of the Fed's post-crisis balance sheet expansion. Trump named him to the role earlier this year after a long search to replace Powell, whose term as chair had become a recurring source of political friction. The signal investors will be reading hardest is whether Warsh sticks to that historical hawkish posture or pivots toward the looser stance the White House has been openly pushing for. He has spoken in public this year about the need to reduce the Fed's footprint and restore credibility, which is hawkish-coded language. But the political pressure to cut rates is real, and a new chair often gets at least one round of benefit of the doubt from the FOMC. The crypto read on this handover risk assets have spent most of May reacting to two things: geopolitical headlines tied to Iran and the expected rate path. The Iran story is already reflected in Bitcoin's slide below $77,000 earlier this week, which we covered in our piece on Bitcoin's drop below 77K after Trump's Iran warning. Layering a Fed chair handover on top of that adds another source of policy uncertainty, just as institutional flows are turning negative. U.S. spot Bitcoin ETFs bled roughly $1 billion in net outflows last week, as we noted in our coverage of the inflation-driven ETF outflow. That kind of flow regime tends to amplify the Fed chair reaction function. If Warsh sounds even slightly more dovish than expected in his first public remarks, the ETF tape can flip quickly. If he leans into his hawkish history, the next leg of outflows gets uglier. The first FOMC is the real event. A sworn-in ceremony is symbolic. The first FOMC meeting Warsh chairs is where prices will actually move. Markets are watching for three things from that meeting: whether the dot plot shifts higher, signaling fewer cuts than the current path; whether the post-meeting press conference language on inflation persistence hardens or softens; whether the Fed signals any change to the pace of balance sheet runoff. Each of those vectors has a direct read for crypto. Higher dots and a hawkish presser would compress liquidity expectations and weigh on BTC and ETH multiples. A softer tone would do the opposite. Balance sheet policy is the wild card, since Warsh has been openly critical of how large the Fed's holdings remain. The practical takeaway for card users: most readers are not trading the FOMC. The practical implication is more mundane. A hawkish Warsh debut would likely keep dollar funding tight, which keeps stablecoin yields competitive against traditional money market funds. USDC and USDT lending rates on regulated venues have hovered around the upper end of the Fed funds range, and that gap holds whether Warsh cuts or holds. A dovish surprise would compress those yields and shift the math on parking cash in stable spending balances on cards. For users on cards that route through stablecoin balances or on-chain wallets, the rate path matters less than the volatility. Heavier swings make automatic crypto-to-fiat conversion at point of sale more expensive at the margin, because the network spread widens during dollar stress windows. The disclosed fee on a card is rarely the full cost during high volatility weeks.